Welcome back, traders. Joel Alconin here with a very special guest, Stephen Bigalow of the Candlestick Forum. Stephen, how you doing today?
Doing good. How are you?
We're doing good here in Benzinga land here on Thursday. MarketFi event yesterday. I hear you were one of the keynote presenters. How did that go?
It apparently went well. We got a lot of response from it, but we hope to get a lot of response because when we present candlestick signals, it's just a very simple concept, very common sense put into a graphic depiction.
Okay. Just real quick before we delve into the candlesticks, could you just give us your education and your market background?
I graduated from Cornell University. Then I became a stockbroker for 8 years and got out of the business because I realized that brokerage firms don't have any more idea about what makes markets go up or down than anybody else does.
Okay, so you like to focus on candlestick charts and trading. Now, did you learn about it through books, or did you learn about it the old-fashioned way, just doing research on your own?
The old fashioned way. I had learned candlesticks by accident. I'd gotten out of the brokerage business. I was buying houses in Atlanta, Georgia, renovating them and reselling them. And somebody dropped candlesticks on my desk one day and said, "Here, you were a stockbroker. Tell me what you think of this." And I thought anything as sophisticated sounding as candlesticks wasn't worth the time and effort. But he kept badgering me for about 3 months. And finally, I picked it up and started looking at it and said, "Well, wait a minute, this makes a lot of sense." And the more I kept looking at it, the more sense it made. So I started investigating them. Now, this was back in the late 80s, early 90s, and there wasn't anybody using candlesticks or talking about candlesticks at that time. So I started researching it. There was some information that was coming back from Japan at that time. But the more I looked at it, as I say, the more sense it was making. And I started using it, fortunately, on the basis that I was probably one of the worst investors in the world. And when I started learning candlestick signals, I kept thinking, this makes sense. So if I could graphically see where I was doing everything wrong, then I could graphically see where I should start turning everything around 180 degrees, which I did, and I just started making money after that.
Okay, well, I'm kind of a bar chart guy. So what would you do to convince me that I should throw my bar charts out the window and start focusing on candlesticks? What would you do to convince me?
Well, the Japanese rice traders took very important elements about investor sentiment, which was instead of a bar chart, they would box in the open and the close, meaning if it closed above where it opened, it would create a white box. If it closed below where it opened, it would create a dark box. And they discovered over 400 years of research, not research, but actual use, that the combinations of different box formations would show that there's been a change of investor sentiment. So you get a heck of a lot more information in a candlestick chart than you do in a bar chart. The graphics of a dark candle versus a white candle, and then the different signals that are created by investor sentiment gives you a lot more information when there is a change of investor sentiment in a trend.
Okay, well, you're doing a good job because I definitely like to focus. I think the opening print, especially in New York stocks, where you have a large on balance volume, is a good indicator. The opening, a lot of times you'll see is a high or a low in the day, and then the closes are also significant areas, as that's where traders and firms are marked on their positions, and whether it's good or bad, that's something that they use on their portfolios. So you're making some progress here on that, Stephen.
Okay.
And then you already went into like the investor psychology, how it creates a picture for you. But let's go back a little bit for like the novice investor. I mean, what are some of the easy things to look at to extract information from the signals? A couple of the basics of candlesticks.
Well, essentially, what you're seeing in candlestick charts is the graphic formation or the graphic depiction of investor sentiment. And through the years, I've discovered prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's exactly what candlestick signals are, is the graphic depiction of what's going on in investor sentiment. So whenever I get off track a little bit, I come back to one basic premise, and that is that the candlestick signals and patterns are the accumulative knowledge of everybody buying and selling during a specific time frame. So it's showing you immediately what's going on in investor sentiment. So as far as a beginning investor, I mean, we're always, I say everybody's always been told just buy good companies and hold them long term. You're going to come out well. Well, as we saw in 2008, that was not a good investment practice. What candlestick signals and patterns do is show you what's going on in investor sentiment right now. And if you can use that with other indicators, such as moving averages, trend lines, Fibonacci numbers, anything that everybody else is watching, the candlestick signals tell you exactly what's going on right at those specific levels and the different signals. As I started learning candlesticks, there's about 50 or 60 signals that you can learn. And when I kept asking people in the early stages, why isn't everybody using candlesticks? They make so much sense. The answers that came back were there are too many of them and they don't always work. Well, as I went through the research, I discovered there are too many of them. There's only about 12 major signals that you want to learn. And once you learn what they look like and the psychology behind creating those signals, you pretty much have a mental grasp of what's going on in market trends like you would as a 40-year investment or with 40 years of investment experience. So I also kept coming back to the premise that if it didn't work, we wouldn't be looking at them 400 years later. The family that developed the signals didn't become wealthy in Japan. They became legendarily wealthy. They were the powerhouse for centuries because they made fortunes trading the most basic of all commodities, which was rice. So essentially what they have proven or kind of illustrated was, again, prices do not move based upon fundamentals. Prices move based upon what investors think those fundamentals are going to result as.
Okay, in your second book, you combine candlestick analysis with, you call it effective Western technical analysis. Could you just give us a brief description of Western technical analysis and how you integrate it with candlesticks?
Oh, you've got all your basics of prices move essentially in waves. I mean, that's kind of proven, and that's human nature. If a price goes up too quickly, you're going to have profit taking. Well, what you have as far as the visual elements built into candlestick signals is that you can see what the nature of investor sentiment is. If you have a strong price move and it reverses, now we want to see whether that was a true reversal or whether that's just a profit taking pullback. And because of some of the characteristics that are built into candlestick signals, such as the doji, which is where they open and close the trading about the same level each day, which essentially means there's indecision between the bulls and the bears. So if you see a pullback that has a few dojis in it, it basically tells you there is indecision on that pullback and they aren't really selling it off. So you can get ready for a pattern, which we call the J-hook pattern, which is just a simple wave one, wave two, wave three pattern that if you take profits after that first price move, instead of giving up on that trade, you just wait to see whether it's going to go into the next wave after the pullback. And wave three of a J-hook pattern is usually equivalent to wave one of that pattern. There's also what we have is a fry pan bottom, which is a big, slow rounding bottom curve that you couldn't trade if you wanted to, but the candlestick signals show you where the entry point becomes to get into that trade on a breakout situation. And that's what usually is the result of a big fry pan bottom, is a very strong price move that breaks out through the other end. The nice thing about the graphics of candlestick signals is that it builds in all the perceptions or all the indications of what most investors do, which is most investors buy exuberantly at the top and they panic sell at the bottom. And so when you're looking for the old adage, where do you grab for the fallen knife? Candlestick signals basically tell you where the selling has stopped and the buyers are stepping back in.
Okay, so that's how you eliminate the emotion in the trading. And you're talking about a lot of terms that maybe our traders or investors are not familiar with. Could we just could we just go through a couple stocks here that are on your radar, perhaps for potential entries in the market, and on what the potential setup is, and what you're looking at, and what would need you what would be your next move? So if you got just got something that is kind of on your radar here, I can throw a chart up, and then we can kind of walk through. You can think your analysis out loud for us.
Okay, there's one specifically that we're investing, which is kind of an obscure one right now, but the symbol is OXBT, and that's Oxygen Biotherapeutics.
I
All right,
got you. Okay.
all right, that stock has recently started from about October 28th on what we call a little kicker signal, which means there was a dark candle. Then the next day they opened above the open of the previous day and went the opposite direction, which created a very strong price move. Went from like 7 3/4, or I'm sorry, 1 3/4, or $1.75 up to 9.50 over a 5-day period. Then for the next 2 weeks, it has just slowly pulled back indecisively until it's hit the 20-day moving average. And yesterday, it created a bullish engulfing signal, which is one of the 12 major signals. So now we're buying on positive trading today because that's essentially setting up a J-hook pattern, which means if we're buying today, our anticipated target is the same price move as we saw in wave one, which means this one could move up into the $14, $15 area fairly soon. So that's essentially what we're trying to do, is find the patterns that are created in investor sentiment, or time and time again. Prices or investor sentiment works the same way 400 years ago, and it's going to work the same way 400 years from now. Prices are all based on the effect of human emotions and basically the fear and greed factor.
Okay, was there some news? I mean, here you got a Putic stock here, so obviously there had to have been some fundamental news. An FDA approval, or was it something like that caused that spike?
Apparently, but that's what we don't have to be concerned
Okay,
about
good.
in candlesticks. Is we don't need to know what the background is or why a price is moving. All we have to do is analyze that the price is getting bullish or bearish sentiment coming into it. So there's a lot of times where a pattern will set up a reoccurring pattern that we can identify, like a fry pan bottom or a cradle pattern, which is a big down day and then 4 or 5 flat doji days, followed by a big bullish day. We don't have to know why that has reversed. We just know it's reversed. So again, going back to the basic statement that the candlestick signals are the accumulative knowledge of everybody buying and selling during a particular time frame, all we have to see is that somebody's made decisions that they want to be buying and creating that same pattern that has occurred hundreds of millions of times in the past. And so we're just buying based upon what everybody else's knowledge is telling us that price movement is going to do.
Yeah, a couple things of note here using my rudimentary form of technical analysis. I mean, you had the move up from 2 to 11, $9 move. You pulled back over 50% here. Does it have any significance to you that it filled the gap from when it was trading on November 4th? It had a gap up and it's come down and filled the gap. Does that have any significance to your trading?
It doesn't have primary significance, but it has additional credence of why the buying is going on at that particular level. So we're seeing a bullish engulfing signal right at the place where it's filled the gap. Also, it's bounced off the 20-day moving average. But we have one technical indicator that is extremely accurate, which we call the T line, which is the 8 exponential moving average. And there's a very simple analysis of that, which is if you see a candlestick buy signal and a close above the T line, you're in an uptrend until you see a candlestick sell signal and a close back below the T line. So it's a we I know a lot of people don't use the 8 exponential moving average, so we put it on the same basis as a
Hi, Steve. This is
oh
Bill
mercy.
Hunter. I'm calling with Clear Channel Media.
Oh, I'm sorry. I've got new phone systems here, and I don't know how to shut it off.
Ah, don't
Um,
worry about it. Just pick it up and throw it against the wall.
okay. uh,
Uh, okay. You got something here on the upside. I mean, you'll short stocks as easy as you buy stocks, correct?
exactly.
Okay.
Again, coming
Do,
back to the same premise. Oh, mercy. Mercy.
that's okay.
Um,
Don't worry about it. We usually see
okay.
the technical and computer problems we have here, so don't worry
Okay.
about it. Could you give us an example of something on the upside? Where you're getting a potential short signal.
Yes, there is a. Right now, we're going short in a stock QLIK, and it has dropped dramatically from the $33 range down into the $26, $27 range. But it over the last 4 weeks, it has done what we call a dumpling top, which is the opposite of the fry pan bottom. A very slow rounding curve, and now it's breaking to the downside. And so that tells us that this is a bearish J hook pattern. That the next downside move could be the same movement as
Ooh.
we saw. Uh, so now, yesterday it did a doji, and a doji again is a day where they trade, where it traded, but it opened and closed almost at the same level, meaning there's indecision between the bulls and the bears. This makes it very simple. If it opens lower today, that tells us the bears have won. And if you'll note on your chart, there was a big candle uh, the day before the doji. And if it opens lower today, we have what we call a doji sandwich, which means that big down day and then the doji. Then if it opens lower today, there's a very simple rule of a doji. It's usually going to move in the direction of how they open it after a doji. And usually that price move will be equivalent to the same move that was prior to the doji. So that's what we call a doji sandwich, which means that becomes a very high probability trade that it's going to go down the same magnitude it went down uh, the day before the doji, which means we're shorting it on a lower open with a high probability that it's going to have a down day the same magnitude as the previous day. And the chart pattern being a bearish J hook means there's probably another 4 or 5 points to the downside. So essentially, the price moves and patterns that are easily identified using candlestick signals at least put you in a situation where the probabilities are pretty high that you're going to be in the right direction at the right time, whether you're going long or going short.
Okay, well, thank you for those explanations of candlestick charting. You definitely have won over a fan here in me. I'll have to break out my books again on technical analysis and take a look at it. Thank you very much for coming on, and we'll certainly follow these two stocks over the next couple weeks or so and see if the moves come to fruition. I sure hope they do for you. But thanks again for coming on, and we'd like to do it again.
All right, great. Thanks for having me.
Okay, we're going to get some